What billionaires are investing in right now. In the world of investing, billionaires don't follow trends, they set them. Their portfolios are not just collections of assets, they're blueprints for where the world is heading. The power to move markets, influence policy, and back industries before they hit mainstream awareness, billionaire investors have become global architects of wealth. This July 2025, the ultra-wealthy are repositioning their capital in response to shifting economic conditions. Inflation still lingers, AI is upending entire industries, and global supply chains remain fragile. But amid the noise, billionaires are acting with clarity, diversifying not just across sectors, but across strategic functions that control tomorrow's infrastructure. In this video, we're uncovering exactly what billionaires are investing in right now, based on the latest 13F filings, private equity moves, and global investment reports. Let's explore the 5 most active billionaire investment plays of the season and why they matter for everyone else watching the market. 1. Artificial intelligence infrastructure and tools AI is no longer just a disruptive force, it's now core economic infrastructure. But billionaires are no longer simply buying stock in flashy AI apps or chatbots. They're going deep into the plumbing of AI, the hardware, software, and energy required to scale machine learning on a global level. In July 2025, key billionaire-backed funds are increasing exposure to chip designers like NVIDIA and AMD, but also more niche operators like ASML, lithography machines, and Arista Networks, data center hardware. The logic is simple. As demand for AI models grows exponentially, so does the need for advanced chips, cloud servers, and high-bandwidth connectivity. Many are also backing private startups building synthetic data engines, AI model compression tools, and multimodal processing frameworks. These aren't consumer products, they're back-end enablers, making it easier for AI to scale efficiently. Elon Musk's xAI initiative is reportedly working on its own data centers powered by renewable energy. Meanwhile, Peter Thiel's funds are expanding their positions in European semiconductor manufacturing, anticipating supply chain reshoring efforts. Another layer of investment is going toward AI-specific cloud computing companies that rent GPU resources by the hour to startups and enterprise clients. With training models becoming exponentially more expensive, billionaires are backing the companies that rent out compute power, not just build it. Think of this as digital infrastructure, new oil wells of the AI economy. Second, private credit and debt markets. With global banks tightening lending standards in 2025, billionaires are stepping into the void and becoming the lenders themselves. Through private credit funds and bespoke debt structures, they're earning predictable returns while taking on less volatility than equities. In this landscape, firms like Apollo, Blackstone Credit, and Oaktree Capital are offering yields ranging from 8% to 12%, depending on risk and collateral. These funds lend to mid-sized businesses, real estate developers, and even entire infrastructure projects. In return, they receive consistent interest payments secured by assets. Billionaire investors are drawn to this sector for one reason: asymmetric risk. Unlike the stock market, these investments often include protective covenants, collateralization, and priority repayment structures. If the borrower defaults, the investor still holds claim over real assets or cash flow. Warren Buffett, known for avoiding tech fads, has increased Berkshire Hathaway's exposure to floating rate debt instruments, a smart move in an environment where rates could adjust further. Other families like the Pritzkers and Soros Fund Management are creating their own private lending vehicles tailored to high-demand industries such as clean energy and logistics. In 2025, with traditional banks pulling back, billionaire-backed debt firms are funding mid-tier businesses that still have strong cash flow but lack access to credit. This allows billionaires to earn institutional-level returns while locking in protections the average investor could never negotiate. It's not just smart, it's power with a yield. 3. AgriTech and food security. While most portfolios are dominated by tech and energy, the ultra-wealthy are quietly buying into something even more fundamental: food. Climate change, population growth, and geopolitical risk are all converging to make agriculture one of the most strategically important sectors on Earth. Bill Gates' massive land acquisitions made headlines, but others are catching on. Billionaires are now investing in agri-tech platforms that use AI, robotics, and blockchain to optimize crop yields, reduce water usage, and automate farm logistics. Firms like Indigo Ag, Plenty, and Bowery are attracting capital for vertical farms, gene-edited crops, and soil analytics. In addition to farmland, billionaires are targeting supply chain choke points, cold storage, transport fleets, and food packaging tech. Some are even backing synthetic biology labs, creating lab-grown meat alternatives that require a fraction of the land and energy to produce. In 2025, global food prices have risen 13% year over year. That's not just a headline, it's a signal. Those who control food production, innovation, and distribution will hold enormous economic leverage. And now they're focusing on climate-resilient crops, genetically modified strains grains designed to thrive in droughts, extreme heat, or low-soil regions. These innovations could redefine food security on a global level. 4. Green energy transition assets. Despite temporary slowdowns in the renewable sector, billionaire investors remain laser-focused on the long-term transition away from fossil fuels. But their focus isn't on retail solar or electric vehicles anymore. It's on owning the critical infrastructure behind the scenes. July 2025 has seen a surge in billionaire capital flowing into next-generation storage solutions, like lithium silicon battery tech and industrial-scale hydrogen tanks. Venture arms of Jeff Bezos and Masayoshi Son are aggressively backing grid-level battery startups as energy volatility forces countries to upgrade aging infrastructure. Additionally, carbon capture and storage, CCS, has become a new frontier. ExxonMobil's pilot CCS facility in Texas is now partially funded by private equity arms linked to oil wealth billionaires hedging against their own legacy industries. Investors are also buying mining rights for rare earth metals like cobalt, lithium, and neodymium, used in turbines, batteries, and electric grids. South American and African mining operations are becoming acquisition targets, not for speculation, but for resource security. Even nuclear energy is making a comeback. Bill Gates' TerraPower and Sam Altman's Oklo are leading the push toward modular nuclear reactors, offering clean, scalable power solutions for the next 30 years. Billionaires don't just buy green for the optics, they buy it because it's the energy foundation of the next century. 5. Digital real estate and tokenized assets. In the post-NFT crash landscape, most casual investors walked away from blockchain, but billionaires didn't. They simply shifted focus from speculation to utility-backed digital ownership. Now in July 2025, major wealth is flowing into tokenized real estate, fractional asset platforms, and blockchain-based securities that offer real-world yield. The focus is on platforms like Realty, BrickTrade, and Securitize, where high-net-worth individuals can own verified fractions of commercial buildings, logistics centers, or energy assets, all generating passive income. Andreessen Horowitz and SoftBank are backing Web3 infrastructure companies building the rails for digital securities, identity management, and contract execution. The idea is clear. The future of finance is programmable, and those who get in early will own the code and the cash flow. There's also renewed interest in digital land tied to real-world experiences, such as virtual campuses, branded entertainment spaces, and immersive commerce. This isn't the old metaverse trend. It's about hybrid utility, where digital ownership grants physical world perks or returns. By entering now, billionaires are owning protocols, not just properties. They're buying access to the next generation of financial tools before they're adopted by the masses. This is Web3 done right, quietly, strategically, and with returns tied to assets that actually produce something. Billionaires don't guess, they calculate. While the average investor reacts to headlines and market noise, the ultra-wealthy play 5, 10, even 20 years ahead. They invest in systems, infrastructure, and essentials, assets that shape society and won't vanish with the next news cycle. From AI infrastructure to food innovation, from energy storage to programmable finance, each of these investments reflects a strategy built on durability, control, and long-term asymmetry. And while you may not have billions to deploy, you can absolutely follow the blueprint. Start small, think strategically, stay informed. And if this video gave you insights into how wealth is really built in 2025, don't forget to like, comment, and subscribe for more breakdowns designed to elevate your financial intelligence.